filter, what is the keyword we should use for tracking spin-offs?
Yes, so spin-offs, you need to use scheme of amalgamation. That's one. You can look at spin-off also as a keyword. Then what other keywords are there? You can look at a demerger as a keyword. And the easiest way for you to do is to look at actual demergers that happened in the last 2 years. Pull the announcements for them. They will be available there. It's much easier to search as well, and look at that document and then find a keyword there. So you, after you look at 20 documents, you will automatically start finding. I look at every day, look at over 200 keywords across all uh, various buckets and categories. And that way you can kind of, but even then it's not 100% accurate. So if you're looking, for example, if I put this particular keyword every time, it will be 100% accurate. That's not going to happen. You have to, this is a time investment part, so that's why you have to still kind of invest some amount of time. And most of the times you find duds, but there'll be one or two times which you will find something pretty great, and that's worth all the time that you invested before.
Right. A couple of more questions, Tariq, quickly.
Yeah. Yeah.
So Jitendra asks, after spin-off, one gets a smaller company. DIIs and FIIs have to sell the smaller company because it doesn't fall in their investment strategy. At this point, share price falls. How to know when the selling by funds have been completed to enter, and how to know who sold?
Sure. So, couple of things around that. First, it's not always. There are no always rules in finance. So, it's not always that a spin-off happens and the price goes down because somebody inside is trying to sell it. That's usually what happens, but not always. The latest example I'll give you is Aarti Pharma. So, if you look at shareholder thing, they have sold almost 50% of it in the last 3 months. But look at what the price has done. It found a base and then it's gone up. So it's not necessarily always. And how do you know who's selling is you monitor. So mutual funds, things are available. There are various tools available. There's something called a rupeevest.com where you can monitor monthly mutual fund buys and sells by a stock. And then there are lot of tools available. If it's a bulk deal, you will get to know in announcements as well. Then that way you can kind of easily monitor it. Um, if it's not a bulk deal, then you wouldn't know who's selling it. But on a month-to-month basis, you can kind of do it. And it's also, once you kind of practice it enough, you will know who's the investor inside. So there are a lot of very famous FII funds who traditionally are known to kind of not keep spin-offs and they sell it. So that way you can kind of eventually figure out.
Right. So Sagar asks, any good special situation fund that we can follow?
Uh, so within India, I don't think there's any special situation funds, and the reason behind that is that this is not a strategy that works on a let you wouldn't find a special situation every other day or even a month. There are probably in a year you will find two or three worth investing in, and they perform over a 18-24 month period. So it doesn't suit the need for a fund or a pool of investors kind of pooling their money in. It's a very it's much better to practice it as an individual, because there you don't have all of these rules and limitations around it. If you find something which is selling for, let's say, 90% less than what it should be, you can even invest like 10-20%, nobody is stopping you. But in a fund, they probably can't go above that. So it's very hard to kind of generate very high returns, especially in a market like India, where most mutual fund guys are just looking to beat the index or remain with the index. They have no incentive at all to outperform, and kind of give very high returns. So you unfortunately there's nothing that I'm aware of, and even if there was, I wouldn't kind of subscribe to it.
I think the next best thing to do is follow people, individual investors, and maybe be friends with them.
Yeah.
That can help a lot.
Yeah.
So Tariq is here for sure. Why I'm confusing Tariq and Tahir, I don't know.
That's okay.
So Tariq is here, and we have Vikas Kasturi. He is also present. He is our Mission Smile member and a very close friend of mine. Then we also have Mr. Gaurav Sood, and we had a presentation
Yeah.
with him as well last year. So when you follow these people and maybe be friends with a few of them, then you understand it much better, because
Yeah.
there you get the live case studies and you see what is working, what is not. Right. That
Yeah.
is, I think, the best way out.
Yeah. Meet by also does it. He posts a lot about it on Twitter as well. He
Exactly.
can do it.
Meanwhile has
Um,
already discussed. Yeah, he
yeah.
already asked me that question.
Yeah.
Yes.
So there will be a lot of people, and it's impossible for you to kind of just do it because on any given day there are 1,200 announcements on just BSC portal, out of which 90% are useless. So you have to most probably like you won't be able to kind of know everything about it.
Right, right. So Tariq, we can go to the presentation now.
Sure.
We'll
Okay.
again go back to
Yeah.
questions
You're
after
able
some.
to see my presentation screen, right?
Yes, yes.
Okay, cool. So spin-offs, I'll talk about a couple recent examples, and I specifically chosen all of these because they are all five of them are different from each other. So Kamdhenu Paints was an example of investing before the spin-off because the combined entity was available to you cheap. And again, the reason I'm highlighting from this slide is not to kind of give you these names, but to make you understand that each of these are different, and because of that every special situation you have to evaluate it on its own. There's never a set rule that uh, spin off before it spin off you have to invest, or after spin off only you have to invest, or this is a spin off, so that's why it's going to be beneficial. There are multiple factors that go into it, and you have to all of these you have to once you start analyzing it on its own, that's where you kind of figure out whether it's worth investing in or not. The core idea being that if you can buy something at a cheaper price than what it will be, because after the catalyst plays out, spin-off is just a catalyst that allows individual companies to kind of get that valuation gap filled. Uh, so you still have to go ahead and kind of still in research these companies on its own. So Kamdhenu was before, like the Kamdhenu paints plus the traditional business was available for 8 times earnings, 8 times earnings of the parent company. Paints hasn't done nothing so far. Like it's not a very big part of it. Uh, so from there, if you were buying at 8 times earnings, whereas Asian Paints and things like that, and paint companies kind of being normally commanding high premiums. So that way you can kind of judge whether something was cheaper or not. Dave D Plastic Industries is one of the companies that I think Mission Smile has also kind of covered as an example. So here you had to buy it. It's a very tiny company. I'm pretty sure a lot of people don't know about it. I kind of also missed it. Uh, so there this is an example of a very small, let's say not even a small cap, micro cap companies, kind of less than 500 crores, kind of demerging together and kind of building something. Aarti Pharma Labs, this is an example of a company where you couldn't buy before it. If you had bought it before, you probably wouldn't have kind of the individual company uh, plus the own company was a little bit steeper in valuation or was fairly valued. So you had to wait for the spin-off and kind of judge based on the spin-off how much market is kind of valuing it, and then look at the peers. So in this, you have to look at existing API peers. You have to understand how this business is different from that listed peers, and kind of then figure out it. All cargo logistics, this is an example where very highly tracked firm, pretty one of the top two firms or three firms in logistics. But in June, July, I think you were getting this for 250 rupees. Three companies together combined, which has an infrastructure business in it, real estate parks and logistics and things like that, which has a high asset business for inland containers and chains and things like that. And then you have a fast tracking, low asset and very high turnover global logistics business. So here is an example that was available for 250 rupees. After demerge, after spin-off also, this is now available at 250, 280. So you pretty much got the other two for free. Shipping Corporation of India is an example where the government is kind of demerging the two. But the catalyst here is not just the spin-off. It's the spin-off plus if it gets acquired. So, for example, if the land assets is already dematted but has not listed, but I'll take the example of BEML, which has a similar kind of thing. So BEML was again owned by government. They took the land assets out, put it into a separate company, and spun that off. Now BEML land assets itself is worth 170 rupees a share. So if you were getting BEML at almost the same price at land assets one, your pretty much existing position in BEML is kind of free. So that's an example of where you all of these, the only thing in common is margin of safety. Unless you have margin of safety, you shouldn't kind of look into that. But the reason I wanted to highlight is that all of these are very different from each other.